Kitco Mining's special coverage of the Deutsche Goldmesse is brought to you by Dynacor.
Gold's great start to 2024. This is Paul Harris for Kitco Mining at the Deutsche Goldmesse show in Frankfurt, Germany. And joining me to talk about this is Jeff Clark, editor of the goldadvisor.com newsletter. Jeff, welcome back to Kitco.
Great, thanks for having me, Paul.
Now, Jeff, we're 18 weeks into 2024 now, and what a year it has been so far. The gold price has remained firmly above $2,000 per ounce. The copper price is at $4.50 per pound.
Right.
Gold producers are beginning to show margin expansion and juicy cash flow, and M&A is starting to pick up. Why is everything so positive?
In my opinion, Paul, if you look back at the dates and when this gold run started, it was actually on leap year day, February 29th, when all of a sudden the market realized, hey, the Fed may lower rates sooner than they said they would, at least sooner than they expected. And sure enough, the gold price ignited on that day and has really not looked back. So it's pulled back a little bit as you and I talked today, but that's when it all ignited. And I think when that gold price broke through previous all-time highs, that forced a lot of short covering, some momentum chasers jumped in, and of course you have the backdrop of the vulnerabilities in our system that support that, including central bank buying. So I think it all started then, and we really haven't looked back then. So now the Fed has said they may have, leave rates higher for longer, but really the gold price being where it's at shows just how strong it is right now.
Well, I think the World Gold Council put a report out this week in which, amongst other things, they said this has been one of the strongest starts to the year ever. Central bank buying, I think it was the highest level since 2016, and other things. So it does seem a confluence, a lot of factors coming together very positively at this time.
Central bank gold buying has been a net positive for almost 15 years now. So it's really a show of strength that after 15 years of net positive buying, that as a group, they're just hitting their strongest level ever. So this could be a banner year for central bank gold buying. That supports the price. In my humble opinion, that is not why the gold price is higher. I think central bank gold buying actually supports the price, though. And so that's an important component of this market. And it's really a show of strength that they're just reaching their crescendo now after 15 years of positive net purchases.
At the start of the year, a lot of analysts were forecasting that gold would hit $2,300 US per ounce by the end of the year. We're there already, sort of 9 or 10 months ahead of plan or ahead of forecast. How much higher can gold go this year? And I say that bearing in mind that the US Federal Reserve hasn't yet started paring back interest rates, which presumably, as and when they do, that would be positive for gold too.
It would be positive for gold. It's when the market thinks they're going to lower interest rates that really is going to be the impetus for that. But gold could easily reach 2,500 this year. I mean, we're closing today as you and I talk at around 2,300. So 2,500 is not really a stretch. And, in gold bull markets, the price goes on surges and corrections. So we've had a surge. We have a little correction now. We could have a little bit more correction, and then it'll go in another surge. That's the way the gold price acts. And so 2,500 is easily within reach this year.
Let's be contrarian for a moment, Jess. The year has started so well. What could go wrong?
For the gold price? Oh, lots of things. The Fed could raise rates. That would be probably the biggest short-term indicator that the gold price could suffer in the near term. But that's a short-term factor only. So in the long run, the Fed isn't going to have the big impact on the gold price. It's going to be other things, whether it be monetary concerns, financial concerns, market concerns. There's a lot of vulnerabilities in the system right now. It could be the lack of a discovery, though, that could hold the gold price back. It would be nice to see another big discovery made this year, if not more than one. There are several factors that could hold it back, but the factors that could push the price higher, in my opinion, outweigh the factors that could push it lower.
Okay, well, that's good to know. Now, the gold price may be riding high, but most gold equities are stubbornly refusing to budge much. Why do you think that is?
Well, very simply, it has not trickled down into the junior sector yet. Even some of the majors haven't moved all that much. Some have. Look at Agnico Eagle and what it's done the past couple months. But the money flows into gold first, and then it flows into the producers. Then it'll flow into the developers. Then it'll flow into the juniors. So that's its historical pattern in terms of money flows. And so it's not unusual to see that the juniors have not moved yet. That underscores the opportunity, and it does tell you, in my opinion, that the clock has started. So you have a window of time to make sure you have the exposure you want in the juniors before the money trickles into that sector. Because once it does, then you'll be trying to jump on a moving train.
When things move, they tend to move pretty quickly.
They do, especially in this factor, in this industry, yes.
One thing that can generate excitement in the space is M&A, mergers and acquisitions. We've seen those starting to occur, perhaps with increasing velocity. Of the deals we've seen so far, have there been any that really stand out that you particularly liked? Are there any that have been particularly surprising to you?
In my view, there's been some M&A, but we're at the very beginning of this cycle. There's been a lack of exploration, a lack of development, a lack of discoveries. So M&A is going to happen. There's a chart a week of the lack of exploration, the number of ounces that are being discovered versus historical, versus what is needed really to maintain the industry. And so there's going to be a lot more M&A ahead. It's a lot cheaper right now to just buy ounces than it is to try and explore and develop and permit and put into production. So M&A is really at the beginning. I do expect it to not only continue, but to pick up steam.
I think one thing that's illustrative or instructive is the fact we're starting to see premiums again, or premia. I imagine it's relatively straightforward to give a premium pricing when stocks have been beaten down so low.
Yeah, right.
Depending on what side of the deal you're on, it doesn't seem such a big thing.
Yeah.
To give let's say a 50% premium on a 20-cent stock.
Yeah, right. Well, the average premium historically is about 35%. They've certainly been higher, and sometimes they're lower. But it is easier to get the bigger premium right now. The worry is that they buy out a stock that you're down 50% on, and they only give you a 35% premium. So I'm hoping we get a lift in the sector before that happens. But that's coming. That train is starting to heat up now. So it's coming.
Isn't that compensated for somewhat by the fact that a lot of the deals have been all stock deals? So presumably a smaller company is exchanging, or shareholders in a smaller company is exchanging stock for shares in a bigger company that hopefully will have a much higher and quicker trajectory towards a higher pricing.
Yeah, and as an investor, you can choose to sell those shares when the deal closes if you want and capture the premium that way, or you can ride the producer higher, depends on what your strategy is. And as an investor, you can do either one. Whether you keep the shares no longer depends on the company that was bought out, but depends on the bigger company, obviously, as a whole, and what they're going to do and what their trajectory is, what their strategy is, and that sort of thing.
Okay. Is there a particular M&A transaction that you would like to see happen, if you could have your wish?
My wish would be all the ones in my portfolio get bought out, of course. The interesting thing is, though, there are a number of companies out there, we own some of them, that already have resources. And they're trying to not just prove up those resources into a higher category, but to find more ounces. And so those companies, I think once the money starts to trickle down and the producers are more profitable given the higher gold price, that's another impetus that could really speed up the M&A process. They're more profitable now. They can buy more now. But I think they might reach down to those companies first that either have a big resource that they're going to want, or one that could be a lot bigger that they're going to want. But the targets initially, in my opinion, are going to be those that already have ounces, and they don't have 500,000 ounces, but they have 2 million, 3 million, 4 million, and 5 million ounces. Those are going to be the first targets, I think.
We saw a couple of transactions like that this week. Jeff, let's switch track to copper for a moment. There's been a lack of M&A in the copper space. There's been a lack of discoveries in the copper space. There's a lack of a project development pipeline in the copper space, and overall a lack of exploration, even though most analysts forecast that there's a copper supply deficit coming. that, depending on who you look at, could grow to 5 to 10 million tons per year by the end of the decade.
Yeah.
Does it surprise or shock you the lack of exploration, the lack of interest the copper sector seems to be generating?
It does. The green energy movement is relatively new, generally speaking. So a lot of the money has not had a chance to flow down into that. Electrification is the number one way the green energy is going to be met, along with other metals, of course. But copper is going to be one of those metals that's going to be required in order for these politicians to get their dream fulfilled. And so it is surprising. That underscores the opportunity that myself as an investor has to actually capitalize on this, because there's going to have to be more development. There's going to have to be more discovery. There's going to have to be more exploration. A lot of money has to pour into this sector. And you're right. Every week there's a new chart about the deficit that's coming in copper. But take the average of those, and even if that was only half right, that's still a lot of copper that's going to be needed. And so the rush into copper really hasn't happened yet, and that is something as an investor I like to hear.
And how are you positioning yourself for that? Are you looking at the producers, the developers, the early stage explorers, or a mixture of all of the above?
Well, somebody can look at a mixture of all the above, but I personally like to focus a little bit further down the ladder in discovery and resource development and that sort of thing. So I'm focused a little bit more on discovery, some early stage, some post-discovery, and some that are developers. That's where I think I'm going to get the biggest bang for my buck, and so that's where I'm focused.
Okay. Now, Jeff, as we come to a close here, how do you think the rest of the year will play out?
Well, there's what, 2/3 of the year yet to go, and so I would not be surprised to see the copper price stabilize at this level. I would not be surprised to see gold move higher at this point. I would not be surprised for silver to follow suit. Gold, we always know gold moves first, then silver. They've been kind of moving in tandem, but silver has a lot of catch up yet to do. So I expect to see that gold-silver ratio fall going into the end of the year. Most of my effort, though, is not worried too much about the metals, but more focused on the mining companies themselves. Who is primed to make the best use of higher metal prices as we go along? In all those metals, all three of those are going to be in bull markets, and I think we're just at the beginning of the bull market in each of those.
Excellent. Well, Jeff, thank you very much for joining us today.
Great. Thanks for having me, Paul.
And I'm Paul Harris, and this is Kitco Mining.
Kitco Mining's special coverage of the Deutsche Goldmesse is brought to you by Dynacor.